Not seeing any of the takers.
This is that once in a lifetime.
Welcome. We are back. Another week in the market. What's up, D? The guy, Lindsay Glenn, AK buy the dip, like the name, and Nerve in the chat. How are you doing? So right now, as we speak, actually, crypto's bouncing up a bit. If you watch my last stream, I said it's actually one of the asset classes I'm currently becoming bullish again on, unlike the stock market right now. So we will see what happens. Buy the dip, yes, originally. And yeah, there's a lot to talk about. One announcement, two announcements actually. Actually twice. And if you've been watching the last 4 or 5 streams, we've been stuck in this area on the SPY. And this whole entire area right over here that I'm about to map out, I've been saying I'm bearish. Now you're starting to see the rejection of resistance. You're starting to see a pullback. It's starting to happen. Been warning about it for a long time, and there could be more downside. But if you're prepared for it, not only does that help you manage your risk, but it could help you make profit. So we're going to talk about that. And yeah, for anybody who's new to the stream, I'm going to be starting off with crypto, then other markets, then the stock market, and then we'll do individual stocks, maybe some take requests. We'll see how much time there is. Let's get started with the clip though. Hopefully this is the right one. Shout out to Zeke for finding this in the chat. So we can end it here. Make sure to hit the like button if you don't already. Hit the subscribe button. Check out the links in the description. Premium, the free Discord, the free course. And I don't think my TradingView referral link is there anymore. I think I deleted my referral links from the stream. But there is like a 60% sale. If you get the premium version of TradingView, there's pretty good discounts. I think I literally have it right here. If you want my referral code, it's in the announcements channel. I put it there today. 60% off premium. This is what I have. Everybody asks me what charting software do I use, what TradingView plan do I use. Every Black Friday, I do this and I extend it. So I think I have another 2 years of premium right now. 60% off. And if you don't want that, 50% off for Pro Plus, 40% off for Pro. I'm not sponsored by TradingView. I genuinely wish I was. I've literally asked them to sponsor me before, but I'm going to have to wait a little bit longer, it seems. All right, let's go back to the charts. As you saw on Thanksgiving, I got an email from TradingView. I applied to the partner program, and I'm in. I'm a partner with TradingView now. It's pretty cool. Nothing crazy, but just something I've been wanting for a long time. I'm dropping a link in the chat right now. If anybody's interested, that deal that you just saw is actually still available for Cyber Monday. There's 7 hours left in it. You can click that link in the chat, not only get your deal, get an extra month, but also help support me a little bit. It's pretty cool. Literally every single stream, this chart that you see here, on every single one of my streams since the first ever stream was with TradingView. And all of you have supported me enough to the point where they believe in me enough to bring me in. Shout out to them. And if you ever want to sign up for it, that's my link. It's in the Discord, it's on my Twitter links, it's everywhere. So you can use that if you feel like it. If you don't, it's completely fine. But it's just a very cool thing. And then there's one other announcement before we get into everything. Let's go over here. I did not mean to leak DMs. All right, right over here, the free trading movement awards. Okay, first year we're doing this. Shout out to Cheddar Freeze for making this. If you go to the Discord, I can share the link right here in the chat as well. So I'm gonna drop that link in the chat right now, or if you go to the Discord, the link for that's in the description. It's free to join the Discord, and you join, you can vote for all of these categories. Let's see if I can pull it up. Let me just hide my email first. All right, let's go back over here. And there we go. So as you can see, you can vote for a lot of different things. Most improved traders could be anybody in the Discord. Most consistent member, that could be anybody, your favorite or most helpful mod. Best chart analyst, best swings trader, options trader, most likely the composite operator, best memes, FTM MVP, FTM Discord server suggestions, so that's just like a little optional thing. Which analyst helped you grow this year? You could put anyone for that as well. So we're going to be doing, it's not just going to be this, I'm going to try and think of a couple other ideas to do with it. But that's the community. I'm doing the streams, but the whole entire community is really what all of this is. And at the end of the year, I think the voting for this ends on Christmas Eve. At the end of the year, we are going to do a little awards ceremony, and we'll maybe have some surprises on that stream. It's going to be live on stream when I present all the winners for this, and it'll be a cool experience. So go vote before then. Please only vote one time. And yeah, there we go. So those are just two quick announcements. Let's get into everything that's happening with the markets. Let's start off with the crypto market. I talked about that classic bullish divergence on the 4 hour for Bitcoin over here, pretty much the triangle breakout. You kind of broke out, pulled back a bit, and now you're heading higher again. I do like how Bitcoin got above this little resistance area. It's kind of making a 3% candle higher right now. Next resistance really is around 17.6K. So that, I think, is where Bitcoin could be headed to next. Support is around 15.5K. I think it's looking bullish. And I'm using that word, I think it's looking bullish, because it's still in a bull trend, so the bullish variables will maybe underperform. But for right now, I think that this is a very good start. You even have that daily classic bullish divergence on the RSI. This is where you could see at least maybe a move up to test this resistance, and if you can break above that somehow, the supply line of this channel, and we'll take it from there. Ethereum is also bouncing and trying to get back above. It broke under this critical blue zone around 1200, double bottomed at 1070, and now it's trying to get back above it. This is huge. You can see it was resistance over here, support over here. Now it's trying to get back above. Next resistance, if it can hold above, is 1425. So quick shift for crypto after everything that happened with FTX and all of that craziness, let alone the whole entire year of pretty much selling off. You're finally getting a short-term bounce. We'll see if this is the start of something big or not. There's some statistic where I think like after Thanksgiving until like the end of the year is typically like a very, very crazy time for Bitcoin historically. You've had, I know the 2017, like first crazy bull run to 20K around December, I believe. And then even 2020, you can literally go check it right now. If you go back to 2020, you can see in December of 2020, which was right over here pretty much, from December 10th until the beginning of the year, like you already went from like, that's when you broke back above 20K. It's just a very historical time for Bitcoin. It's done two huge things. The first thing was go to 20K for the first time in December of 2017. And then the second thing was break above that high at 20K in December of 2020. So we'll see if this is another cool December for Bitcoin. Let's move on to other markets now. The US 10-year pulling back a little bit more since the last stream. Let's see, you could actually have a bullish bat here. And this maybe would line up with the bearish things taking place, in my opinion, in the stock market. It's not a perfect bat, you're a little bit deep on the B point. But apart from that, it is pretty close to a bullish bat. And you've already gotten a reaction around the 886. So you're starting to see a little bit of that play out. Maybe a short-term wedge is being tested, or the breakout of that wedge is being tested right now. So a small shift short-term after the longer-term trendline breakdown. If you ever get confused by any of the terms I speak of on the stream or any terms I use on the stream, my free course is in the description. And then we have crude oil, which is still testing $77 support. It was a high from July of last year, a low from September of this year, and it's currently a swing low. We'll see if it holds or not. Then we have metals. Gold is just consolidating after rejecting the 1780 resistance level. It's a little bit scuffed, and then maybe you still need something like this. But you have a little bit of an inverse head and shoulders formation forming here. It's nothing perfect, but it's similar to what you would want to see. And then silver is still testing this huge area. It's been resistance and support before, and it's your 200-day moving average, very big level. The dollar currency index, and again, like we're talking about potentially the US 10-year flipping back to bullish short term, and then also the dollar currency index with a double bottom off the 200-day moving average and a MACD crossover to green, also flipping back to bullish short term. If you remember a couple weeks back, before the market actually had this really good rally, this bear market rally, I was saying I was finally turning bearish on the dollar currency index and the US 10-year. because they were both breaking down. But right now I'm actually flipping back to short-term bullish on the dollar currency index in the US 10-year. And if you watch my last 5 streams, I've been bearish on the market. There is that kind of inverse correlation that has played out at least recently, which is something I've been keeping an eye on. And then finally, before we get into the stocks, the Hang Seng Index has been seeing a lot of craziness. Yesterday, I think it was not yesterday, yesterday, going into the new week, it was down quite a bit from the close the week before. It had like a 4% move down. There was some news that came out, but then today, huge move, it gapped up and went up 5% to close the day, and is now retesting. This is kind of interesting, retesting this resistance zone that you did reject. But again, we were just looking at another chart that had this formation, the inverse head and shoulders on the Hang Seng Index. You're testing a breakout right now. You're testing the neckline, and this is after, if we go over to the weekly chart, reclaiming the 24-year-long trend line. You broke under for a little bit, and now you're back above it with an inverse head and shoulders. Not bad. It's actually, this is probably the strongest technical argument I've seen for Chinese stocks, maybe this year. So keep an eye on that. All right, but now let's head into the stock market. Flat day overall today, but you did see some volatility. Currently, since the close last Friday, which was a very, very slow day, which, I mean, it was a half day, you're down about 2% since then. All right, so we had, my last stream was Wednesday, then there was Thanksgiving, and then we had a few hours of price action on Friday, which really wasn't much. And then you opened this week with the gap down, some more volatility to the downside, a little bit more today, nothing too crazy. And you can see over here on the 4-hour, this resistance zone I had charted, you've now rejected it twice, kind of like a little bit of a double top forming. If we go back over to the daily, I talked about so many different things that made me bearish on the market, and it's why I'm still bearish on the market. The MACD has been green since October 13th for almost 2 months, all right, about a month and a half. And now you're about to flip back to red. Your volume is decreasing. This whole entire decreasing volume for the SPY has been a bearish signal. And then alongside that, we've always talked about it being at the upper Bollinger Band, which we were approaching. We were also approaching the 200-day moving average, this resistance zone, this blue zone over here, this trend line. The bulls didn't even have enough strength to even literally test that. And that was the only thing I was saying. If we did somehow even get up to test that, then you would zoom out, and then, okay, you have a partial decline over here. That gives you a higher percent chance of breaking out of this descending running wedge. You couldn't even get there before double topping at 403. So my bearish stance remains, all right? Let's go over to the 1-hour chart. You're kind of testing the zone. You could see it was support on the 15th and 16th of November. Then it flipped into resistance on the 18th. You broke under it today. You're trying to get back above it. But the price action going into tomorrow morning is a little bit mixed. On one hand, you have this descending broadening wedge on the 15-minute chart. You're kind of breaking out of it into the close. You're slightly above a couple of these highs. However, if you go down to the 5-minute chart, a little bit lower time frames, you also could set up a little bit of a bear flag. I'm just drawing it roughly right now. This is a very random starting point, but you can do it like this. You're seeing a little bit of a bear flag forming at the same time. So a little bit of mixed variables on lower time frames heading into tomorrow. From what I saw, I don't think there was any major economic events this week. So overall, my predictions just for the rest of this week is I think we're going to continue to chop a little bit in this zone over here. There's just too many different variables, but I could see some more downside taking place here. You're not testing any major breakdowns yet, but if we do sell off a little bit more, maybe break under like 390-ish, which is this next yellow zone, you can see a lot of highs over here. If you break under 390 on the SPY, which is not too far away, not only would you be breaking an important historical level, also you're probably breaking down from what could be looked at as a very large bear market rally / bear flag. So after all of this resistance is just above you and you fail to even get up to test it, you've now double topped here. I do believe that this pattern, maybe not tomorrow, maybe not the day after, but in time, however it is, I do believe that this pattern breaks down. Maybe we head down to fill this gap over here at 381 on the SPY. We'll talk about it when we get closer to that, if we get closer to that. So that's really what I'm looking at for the S&P 500 right now. Let's move on to the Qs, which are now breaking under an important zone. So bearish things happening here as well. You could see this green zone over here around 282 to 285. It was resistance, flipped into support for a little bit, but now you're testing a breakdown of that zone. You've got this gap to fill at 269 pretty much. Classic bearish divergence, also losing volume. It's it's playing out exactly how I thought it would. And that's a little bit scary because it's like when things are too good, that's when something funny happens. That's when the composite operator just screws all the technicals up. But bearish variables were there. We're starting to pull back. If these breakdowns confirm over the next day or two, you could see more downside. Maybe these gap fills. It wouldn't be a surprise to me. All right, so that's what I'm still looking at if we go down to lower time frames on the Qs. The only other argument, which we'll see, but it could take a lot of time, would be like a larger flag like this. But I mean, that's very, very large. Like you could drop much lower before even thinking about breaking out of that. So it was a great bear market rally. We're pulling back now. We'll see what happens over the next couple of days, but the way things are setting up, even if you do get a short-term bounce, I think we eventually continue to break lower. All right, and now we also have the Russell 2000, confirmed hidden bearish divergence, rejection of the 200-day moving average and this previous support area. Same thing over here, you're kind of testing that bear flag breakdown. This is a major, major bearish pattern in a bear market. That can really set up some more downside. It's going alongside your trend, all right? So this should be nothing crazy new or whatever. We've been talking about this for weeks. We're now just watching it potentially start to happen. And then moving on to the ARK ETF. If those breakdowns play out on the other indices we just looked at, then most likely this happens on the ARK ETF, which means you're giving up your final major support literally on this whole entire ETF, which would suck. You've held it for the past 2 months that you've tested it pretty much, but you've not really had any success getting away from it. So 1, 2, 3, 4, almost 5 failed attempts to get a major reversal off this level when other indices are now flipping back to bearish. That's what concerns me a little bit. And I actually want to look at one more before we move on to individual stocks. We don't look at this index too much on the stream, but the Dow Jones, which has been a little bit different. If we go back over to the SPY for a second, you can see that the SPY did not even test a breakout. I mean, let me just clear this up because there's a lot here. The S&P 500 not even test a breakout of that trend. That red trend line I just you did not even test a breakout of that. All right. The Dow Jones, however, very quietly by itself went and broke out and even started continuing higher. So you had 3 different rejections, very similar to what the SPY did. However, the SPY basically went up to over here and then did this. Well, not all of that yet, but the SPY's pretty much done this, right? The Dow Jones actually broke its trend. It broke out of the down sloping channel it's been in all year. It broke above the 200-day moving average and has been moving higher. But if we see these other indices start to pull back, you would figure this does the same. Then you can draw this out. You have this kind of rising wedge over here that you're just breaking down from. Your MACD has flipped back to red. And you also have, I think, some classic bearish divergence on the RSI with a very bearish candle yesterday as well. So maybe that sets you up for a back test or at least something like this. We'll see how that goes from whatever it decides to do then. But you would think that if the market overall does pull back, this will also do the same, even though it has had a nice little run compared to other indices, even though they also rallied as well. So those are my thoughts on the overall market right now. It was a kind of flat day for a lot of stocks, so there's not a lot to talk about. Fisker, one thing I am watching on this one, it still is an ongoing swing trade, is it just broke out of this falling wedge. And again, I've been talking about it nonstop, but you're starting to see this very slight trend of higher lows. If you can continue this and get back above 8, the very important support from earlier this year or before in this year. It's been a few days since I streamed that. It's a little bit tough to talk like this sometimes, but if you can get back above that, that would be great. Let's, for argument's sake, invert this chart for a second. Just imagine you're looking at a chart like this. It probably looks like it's about to dump. You kind of double topped over here. All right, this is not working. All right, you double topped over here. Then you created this rising wedge. You made a lower high. You're breaking down from your rising wedge. That looks like this is about to happen. However, this chart's inverted. So it would mean this would happen. So we will see. But if you want that next higher low, you're hoping that this wedge is kind of what sets that up. And then on the daily, not much has really changed. Holding in. I'm like holding in a sneeze. This always happens when I stream. All right, so that's really how Fisker is looking at. Also alerted AMD as a swing recently. It's down a little bit, but it's still above support. So the $72 level, you can see these lows around this area before in 2021. You broke above it, back tested it. You're retesting it one more time. Hopefully it holds. Assuming the market does pull back, this is going to need to outperform a little bit. What could allow it to do that? Holding this support and breaking out of this wedge that it's been in since November of last year. So it's not over, but pretty much this is the area where, for the sake of the swing, it needs to bounce. Otherwise, the stop is under this low from November 17th. All right. So that is AMD. Let's look at some large caps now for a second. Google has continued to reject the breakout of this descending broadening wedge, which if you watched one of my last streams, I did say I didn't think it would break out of it. It still has not. Got some hidden bearish divergence. There's a gap fill under at 89. So let's say the market does pull back. I mean, there's more downside for a lot of these names. Amazon has a gap fill at $89 as well, and no major support till 83. If we go over to the weekly chart on Amazon, you can see it's back in this consolidation range from 2019. It's broken under these lows from May of this year, which was kind of highs from February of 2020. It's like an inverted cup and handle. Like, these charts are showing more potential downside. All right, they still are, and a lot of these charts are much lower than they were. For an example, the S&P 500 put in its low on October 13th. Let's go back to Amazon. It put in its low on November 9th. We go back to October 13th. That was where Amazon had it low. But even though the SPY has been rallying in the meantime, due to a lot of these large cap tech stocks having a bad reaction to earnings, they're already at lower prices. So now, if the fact, even after the fact that the SPY has rallied, some of these stocks like Meta and Amazon, a lot of other names, they're actually already lower than this swing low. Now the SPY starts breaking down here again, even though the SPY is higher and it's not putting in new lows for the year. Any sort of pullback here will probably send a lot of large cap tech stocks to new lows of the year, which is not something you're going to be looking for to get you out of a bear market. The leading sector for the past decade underperforming. It's not a great signal. All right, so that's how Amazon's looking. Let's move on to Meta, which it's kind of weird. It had this huge wedge before earnings. It gapped it down. It kind of ran back up into this wedge, and you don't see this a lot, but it's actually been using the previous demand line from all the way back up over here as a support for the past couple of weeks. Even on like the 1 hour chart, there's a little bit of a wedge forming. Meta does look a little bit different to me, but again, market pulls back, you break under these lows over here, maybe fill this gap, maybe fill this gap, maybe fill this gap. There's a lot of gaps to fill on large cap tech stocks right now, should the market pull back more over the next week or so, or more. We will see. Apple as well, the inverse head and shoulders, you tapped the neckline, you rejected it. Now you're selling off again. That inverse head and shoulders is out of the question at this point. I would say your support on Apple right now, short term, is 134. You see there's resistance over here, support over here, support twice here. Now you're heading back down into it. You held it twice. I don't know if you're going to be able to do it a third time. Again, this is really what's setting up. I'm trying to paint a picture. I'm trying to tell a story with all of this. If those bearish variables on the S&P 500 and Qs play out, it in turn sets up potential new lows of the year for the stocks that are making up the majority of the S&P 500 and the QQQ. It's not a great equation. It just isn't. It's not a certainty that it will happen either. But if it does happen, it's not a great picture. All right, then we have Tesla, which, it has this wedge in classic bullish divergence. So in a bull market, this is probably what would happen if the SPY pulls back, which I have to say for almost every chart right now. Then we have to look to the other side of things. Bear flag. Gap fill at $170. That's what could be next. Microsoft rejected partially this resistance zone at 250-ish. Pulling back now. Gap fill, 228. So, not financial advice, just theoretically putting this out there. SPY pulls back, Qs pull back. There's gap fills waiting for market participants. I'm not saying you necessarily, but market participants in general, to the downside on almost all the large cap stocks we just looked at. So people get scared that the market might pull back, that the market is pulling back, that we're in a bear market. And we have gaps that could be very easy targets for a lot of these stocks to the downside. Theoretically, I'm just saying theoretically, for short side / put traders. There's always a way to make money, but nothing's certain. There's always risk at the same time. So just wanted to look through some of those. Also, I've been keeping an eye on Coinbase, testing all-time lows pretty much. Still doing the same thing. It has a 1 hour wedge, kind of close to that test. we'll see what happens here. Just another chart to keep an eye on. I think, you know, break out of this wedge. There's a lot of upside. There's not a lot of resistance up until $60, and then a breakdown of all-time lows. Well, then there's no support under. So it's just at a very big make or break area. Just something I've been keeping an eye on that I wanted to share. And then also SOFI, loose idea, but maybe if it can spring back above 5-ish with maybe some more variables, there's really not a lot to work with on the oscillators. Could start to develop some Wyckoff accumulation, but for right now, it's actually just a range that broke down. So I really wouldn't pay much attention unless it was able to reclaim and hold above 5. But just wanted to mention that. And then heading over to soccer, Manchester United continuing higher. I mean, talk about the inverse head and shoulders. I talked about it literally right over here as it was testing the breakout. Since then, it is up almost 50%. Actually, at the highs, it was pretty much up 50%. It took out the inverse head and shoulders resistance. It even took out this resistance it had since 2019. Now it's going even higher. I don't know what's going on with Manchester United after that Ronaldo departure, but stock price likes it. So that's something else to keep an eye on. All right, so that's pretty much what I wanted to talk about for the stream tonight. I think it was pretty straightforward. There's not a lot I can do in terms of looking through individual names right now. It was a very flat day, and I think my main focus is on the market. So I'm just going to continue to keep an eye on all of these things. Hopefully you do the same. Remember, you don't have to trade every day. There are some unclear things in the market right now. It's okay to take some time off and trade when things are clearer to you. We will see what happens. So that's my rundown for tonight. If anybody has any ticker requests, feel free to drop them in the chat, and I'll look at a few. I know Zeke already put in the VIX, which we did not look at. Make sure you hit the like button. Chat to Keanu Trades in the chat. I know you've been crushing it lately. So the VIX. I'm bearish on the market. I'm bullish on the VIX. You are testing a breakout of this downsloping channel. You have filled this gap over here from August 22nd. On the 4-hour, you got a reaction off the bullish pattern completion zone. And I think there could be more upside for this. Again, it just paints the same picture as the market going lower potentially. So, I mean, even with these 3 lows, I talked about a very similar thing on Fisker, but despite the sell-off over the past couple of months, still making higher lows. The VIX making higher lows just still shows that we're still in a bear market. We had a bear market rally, and that's all it was for right now. All right. And MULN, I saw that was like trending on Twitter or something. I don't know if there's anything happening there. Let's see. Let's just extend this wedge out. Still in a falling wedge. You haven't broken out yet. Short term, about 20-ish cents is your final support. Under that, there's no support. And there's really not much to speak on it apart from that. If it breaks out of this wedge, then there's not much resistance until like 60 cents, which would be like a 200% move. So it's just in that penny stock area where it's just kind of going straight down, but I'm sure at some point there'll be some news or something and it could just run crazy really quickly. But it's obviously not easy to predict stuff like that. Palantir broke down from this bear flag, hit the PCZ of a shark, had a little reaction, now it's back at that same pattern completion zone. Yeah, there's really nothing else. That's kind of what it did. I don't think there's much of any variables right now. It's just testing this area. You break that and you got your low from May 12th as your next level. And then I think Mara's already on my watch list. Yeah, so Bitcoin is getting a bounce. Maybe that allows for Mara to bounce off these lows from July and get back inside of this downsloping channel. You do have some resistance around just under $10. However, you've got a little gap fill at 744. All right, so not seeing any other ticker requests. So thank you for watching the stream. Make sure you hit the like button, check out the links in the description. Join the Discord. I should be live tomorrow night as well. And hope you all have a good trading day tomorrow if you choose to trade. Peace out.